Hello, my name is Michael Ralph. I'm a CPA and I'm a senior developer at Cortell Australia in TM1, also known as IBM's Planning Analytics. In this video, I'm going to discuss the intercompany eliminations in financial consolidations, something that is not out of the box in TM1, but Cortell has developed a module to perform intercompany eliminations that can be dropped into an existing model or included as part of a new greenfields development. And I'll discuss what the issue is around intercompany eliminations, why it's difficult, and how we approach it, and then I will give a live demonstration of the module. So let's begin. When IBM's TM1 is presented to a person who hasn't seen it before, much is made of the fact that it consolidates numbers on multiple dimensions in multiple cubes extremely quickly. But the consolidation in TM1 can only aggregate. It's not doing a true consolidation from a financial accounting sense. In financial accounting, consolidation is a four-step process. We need to translate each subsidiary's accounts into a common currency. So we have multiple businesses across the world. We need to bring their accounts into our system and translate them into our reporting currency, which may be Australian dollars, it may be US dollars. We may be doing both, but in each currency we want to report in, we need to convert those subsidiaries' accounts into that currency before we do anything else. Then we can let TM1 do what it does best, which is to aggregate the accounts. We need to eliminate the intercompany transactions and balances and recognize any minority interests or outside equity interest. Three of those tasks are easy. Translating each subsidiary's accounts into a common currency is something that Cortell's core-based model does extremely well with highly functional currency conversion. Aggregating all of the subsidiaries' accounts, TM1 does that out of the box. Recognizing the minority interest is a standard consolidation journal that shouldn't trouble your average accountant. But the elimination of intercompany items is a complex problem to solve, because if we have two subsidiaries, Leaf A and Leaf B, in our structure, and they're trading with each other, A is selling to B, there's credit involved, so A's got B as an intercompany debtor and B has A as an intercompany creditor, maybe borrowings, money being lent across the organisation, interest, income and expense. All those intercompany amounts are valid in the accounts of the subsidiaries. So A's intercompany debtor exists from A's perspective. But when we consolidate and get to parent 3, it doesn't exist because you cannot trade with yourself. You're taking money out of your right pocket and putting it into your left pocket. You haven't enriched yourself. And we cannot trade with ourselves, so the intercompany transactions and balances between A and B have to be eliminated when we're looking at parent 3. C and J, if they're trading with each other, those eliminations will occur at parent 1, the first parent in common in the hierarchy. And Leaf M and Leaf H, any of their intercompany items will be eliminated at the top of the structure. But notice we're not eliminating all intercompany items at the top, we're doing it at the first parent in the structure. So we need to be able to identify where each intercompany item is going to be eliminated. And we may have multiple hierarchies. We may have a management accounting hierarchy, a legal entity hierarchy, a regional hierarchy. So we're adding up the same subsidiaries' accounts, A through M, but in different ways. So A and B trading and C and J trading, as we saw before, but in this structure those transactions will all eliminate at parent 7. And Leaf M and Leaf H trading, first parent in common is going to be organisation 2. So whoever said accounting is boring wasn't using colour to make things clearer. So here you can see that Leaf A has an intercompany debtor, Leaf B, and Leaf B is saying it has an intercompany creditor, A. But notice they're not agreeing on the amount, so perhaps B hasn't processed an invoice from A, or A hasn't processed a receipt from B, so there's a timing difference perhaps, or just an accounting error. B and A are both saying that J owes them money, and J is acknowledging the intercompany creditors, A and B, and the amounts due balance. They're doing their jobs properly. And then leaf M has got intercompany creditors A, B, and J, and A, B, and J have got the intercompany debtor with leaf M, but leaf M's accounts are denominated in Great British pounds, so we can't do anything until we fix that. So we'll translate leaf M into our common reporting currency, which is Australian dollars. And now we've got all of the accounts in Australian dollars. The £12,000 is translated to 20,000 Australian cash at bank. All their data has been translated, giving rise to a foreign currency translation reserve movement of 583, or balance of 583. And we now have Australian dollars to offset, but they're not agreeing. We've got 3333 is against 3300. Similarly, these two here aren't quite agreeing. That may be because the exchange rate used wasn't the exchange rate at which it took the data into the accounts. So the Australian dollar invoices received were put into the accounts at one rate, but then the translation we're doing is a different rate, so we're getting an exchange difference perhaps. Now we need to eliminate the intercompany balances at the first common parent of both parties in the hierarchy. So A's $1,000 debt it's claiming from B will be reversed out here, so it disappears at that point. The 950 here needs to be reversed out so that that disappears. Similarly, A and B's debtor J will be eliminated at the first common parent, which is parent 1, so we'll see a reversal there and a 0 there. And these balances with A and B that J has in its creditors, they'll be reversed out, and the purple ones will be reversed out over here. So you can see put an elimination journal there of 1,000 credit to get rid of that debtor, a debit of 950 to get rid of that one, and the 3,000 being reversed there, and those figures being reversed there, and the purple items are 13,200 reversed out against these items here. But because we had disagreements in the balances, the elimination at parent 1 is fine, it's balanced, but the elimination at parent 3 between A and B is out of balance by $50 credit, and the leaf M eliminations with its counterparties is out by 132 debit, so our balance sheet for organisation 1 is out of balance by $82. So we can post any mismatches to another line, so the consolidated balance sheet still balances. So here, intercompany elimination mismatches, we're putting in a credit of 132 to get rid of that mismatch, and a debit of 50 to get rid of that mismatch. And now we have a balanced balance sheet. We've got this 82 credit sitting against that line, which when we publish the accounts, we may just, if it's a small immaterial amount, write it off to another line, or if it's a large amount, go back to the subsidiaries accountants and say, can you please get your act together, do your job, process those invoices and receipts, work out why you're not agreeing, and resubmit your accounts. And we were doing that just for intercompany debtors and creditors, just in one hierarchy, just for one time period, for a very small organisation. But when we're doing a large organisation, multiple hierarchies, lots of different types of intercompany accounts, so yes, intercompany sales, debtors and creditors, borrowings, interest, income, expense, leases, whatever you're doing within the organisation, we need to eliminate for all time periods, all our months and years, multiple data versions, our actual accounts, next year's budget, a 3-year rolling forecast, and then these hierarchies are not stable over length of time. We may have an acquisition or a divestment and we need to restructure, or just a restructure, moving entities between around the organisation, then we need to restructure our elimination process to accommodate that. So if only Cortell could provide a tool to automate this deadly dull yet colourful process.
Exterminate! 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 is a killer queen, gunpowder integrity, dynamite with a laser beam, guaranteed to blow your mind.
So prepare to have your mind blown. So the example I'm going to walk through in the live demonstration, we have a profit and loss cube and we have a balance sheet cube. The module will work equally well if it's one combined cube of general ledger or trial balance. The cubes have dimensions, so we have a version dimension, which is where we're separating our actual from our budget from the forecast. We have, in this case, a continuous time period dimension, so our months rolling up to quarters, rolling up to years. The module will work equally well with discrete time dimensions of year and month. So they'll just have the years in one dimension and the 12 months in the other, as distinct from September 2019 being different from September 20 as two elements in a continuous time dimension. The profit and loss has a business unit and cost center, which the balance sheet doesn't require. We have an account hierarchy for the profit and loss, an account hierarchy for the balance sheet. We have a currency dimension for our input currency and then our reporting currencies. The data source dimension I use in models to separate the data source so that I can see manual input data versus rule-generated data versus data that's been put there by a turbo-integrated process or batch script. And sometimes I even have cube names, and I can have in the balance sheet a profit and loss element, and any retained earnings movements coming across the balance sheet, I won't put into the rules, I'll put it into that specific, it came from the P&L cube. So it's an audit trail type dimension. And the measure dimension is your dollars, your amount element. So in organization 1, we had an organization, we need to get those elimination journals and we need to put them somewhere. So they don't go in the leaf elements because the intercompanies are valid in leaf A, it's at parent 3 where they go. TM1 doesn't allow data entry of numerics at a parent, that's just for the aggregation. So we need to create additional elements to hold the journals. So you've got leaf A's accounts, leaf B's accounts, the elimination goes in elim.parent3, and the three of those consolidate so that the reversing entries there get rid of the intercompanies, and away we go. And so the module will actually create the elements in our entity dimension automatically. It just reads the structure you've developed and creates the additional elements that it requires, taking the parent name with a prefix of elim. The account dimension, every intercompany account needs to have subaccounts, one for each leaf element in the entity dimension. So the module does that as well. It reads the entity dimension, you identify the intercompany accounts, and it creates subaccounts so that in leaf A's accounts, it can put what leaf B owes it and what leaf J owes it in separate subaccounts. And TM1 has a feature called aliases, where elements that you create can be given an alias. And some companies, some clients use that for foreign language definitions, English and then French and Japanese or whatever. You can use it for an expanded description of something or just alternate descriptions. And so if our entity has aliases where those leaf A becomes Alpha Proprietary Limited, and leaf B is Beta Proprietary Limited, and leaf M is Mike Limited, and there it is, leaf J is Juliet Proprietary Limited. Well, then we want our sub-accounts to use alias as well, and the module will automatically do that for us. And the key to the whole process is the elimination map, where we need to know at what parent the two entities will meet in that hierarchy. So here we've got organization 1, and we can see that leaf A meets leaf B at parent 3, and so the map says that the elimination journals will go to elim.parent 3. That's organization 1. But of course, if we have multiple hierarchies, it creates a map for each hierarchy, so that in organization 2, leaf A meets leaf B at parent 7, so the elimination journals will go into elim.parent 7. So let's see this in practice. Cortell's Intercompany Eliminations module uses two books in the IBM Planning Analytics workspace. The first book is for configuring the intercompany eliminations module, and that's where we create the metadata, the intercompany elimination entities, that's elim dot parent name, and the intercompany subaccounts, intercompany debtors dot leaf A. The metadata is created once, unless you restructure a hierarchy, in which case you run through the process again. And then using the intercompany eliminations module is your monthly processing, where you're loading your data and then running the process to eliminate the intercompany items. So we'll start with configuring the module. So we sign into the application. So our example company is Phoenix Corsair Proprietary Limited, and we're in the configuring intercompany eliminations book, and we'll just work through the buttons. So for dimensions, we go in here and add the names of the cubes that are containing intercompany transactions or balances into the ICE cubes dimension. So this is a dimension, excuse the pun, of ICE cubes, and we're telling it that these are the cubes we're dealing with, our balance sheet and our profit and loss. And we add the name of the entity dimension to the intercompany entities, finance entity dimensions with intercompany dimension, and we can optionally add an alias. So the alias is called alternate name, and our subsidiary dimension with the leaf A, leaf B, etc. is ICX.subsidiary. So I've already done that. We then nominate the hierarchies that we have within our subsidiary dimension. So I've got two hierarchies, Organisation 1 and Organisation 2 are the top parent in those hierarchies in our entity dimension ICX.subsidiary. And I enter the top parent in each hierarchy in the account dimension. So in the account balance sheet dimension, the top parent is balance sheet, and that's netting off the net assets against total equity. And our account PL dimension, the top parent is net profit after tax. So I'll enter that information. And then for my balance sheet and profit and loss cubes, I need to describe what is the version dimension. So I list that. Is it a continuous time dimension? Yes, in which case I enter the name of that dimension. But if it was no, then I would enter the name of the year dimension and the month dimension, and I can select those from my list of dimensions. But in fact it is the answer yes. The continuous time dimension is called ICX.period. I name the entity dimension in each cube, may or may not be the same. The account dimension, the account alias, and here I've called it description. The currency dimension is ICX.currency, and I'm translating from Australian dollars, and I'm inputting to I.AUD, and these are just the elements used within that currency conversion in the core-based module, so that my cubes for my reporting currency Australian dollars. So from any subsidiaries, I take the Australian dollar translation and input my elimination journals into the input Australian dollar entity. The data source dimension, that's optional as well, and I'll take total value, which is the sum of the input data, the rule-driven data, the TI process data, and any other data, total value. And when I'm processing the intercompany elimination journals, I'm going to put that data into TI process, which will then add up to total value when I'm reporting. I'm just saying where it came from, the turbo integrated process, and my measure dimension and my measure element, there's amount. Then for account attributes, I need to examine my profit and loss account dimension and nominate any intercompany accounts, and where I want to put my elimination offset. So in the P&L, I'm just saying if interest, income and expense disagree, put the amount to external interest expense. And my intercompany sales, I'll offset that against my cost of sales account. I don't have intercompany cost of sales recorded. In the balance sheet, my intercompany debtors are shown there as an intercompany account, intercompany creditors flagged there, and the elimination offset is that intercompany elimination mismatches account that I described. So if we go into the entity dimension screen, at the moment nothing's happened, but we can see our organization set up there. And organization 2 is underneath. And we can see our aliases and our currency. There's Leaf M as an attribute of Great British Pounds. Later on we'll see the elimination entities created. And then just checking our metadata, there's our balance sheet, our intercompany debtors, there's no sub-accounts there yet, intercompany creditors, etc. That will be created once we process the information we're giving the module. So then we go to create metadata, and the Turbo Integrator process is running, looking at the organization structure, looking at those screens we've completed, and building the intercompany elimination entities and the sub-accounts. Okay, so if we go back and look at our metadata now, and here's my companies, Mike Limited and Alpha Proprietary Limited, and I can see now I've got my sub-accounts there, and the creditors. So it's created all of those. It's created the elimination entities. There's one there, there's one there, and that's organization 1. And if I go to organization 2, I'll be able to see that. Okay, we'll go back for organization 1. My company's entity or subsidiary dimension, I've got my aliases turned on. I don't yet have aliases created on the sub-accounts. So I'll just go back to the menu. There is a rule I need to do for the intercompany elimination map. Just copy that and pretend I typed it. I can look at that map that's been created. That cube didn't exist until we pressed the big red button earlier. But now I've got my map for organization 1, my map for organization 2. And then I want to see aliases on those sub-accounts. So at the moment, it's just saying Leaf A. I can run another process there. So I'll just turn on the aliases. And I can see my sub-accounts are now using aliases there to match up with the entity dimensions aliases. So I can now see in my P&L that's working, and in the balance sheet there. So that's all we need to do in configuring the module to do the intercompany eliminations. So having configured the intercompany eliminations module, on a monthly basis, we then use the intercompany eliminations module. So the first thing that head office would do would be to enter the exchange rates. So here we're looking at actual and the balance date rates for the 3 months to September 2019, and there's the period average rates used for the profit and loss. And you just enter the exchange rates against the Australian dollar for the various currencies that you want to report in, or that you have subsidiaries in their accounts, and the cross rates are calculated for you. And then we want to process the data. So one of the exercises that you do to set up, which takes a little bit of time, and then on a monthly basis just review for new accounts, begin mapping your general ledger accounts to the model, and especially the intercompany eliminations. You need to map all of your intercompany debtors, creditors, sales, interest income, interest expense, etc. For each leaf element, map those to your general ledger. Having done that exercise, you would then load your data, whether that's coming from comma-separated value text files dumped from the general ledger, or whether it's an ODBC link directly to the general ledger, which you would load the model and examine the data. So you can see here the 5 companies which have populated data and the currency in which it's input. So there's Mike Limited in Great British Pounds, and you can see the intercompany amounts that are in there, and the green zeros are where the company cannot trade with itself, so the model's blocking data entry there. Then we want to do the intercompany elimination. So with all of that metadata that's been created before, we now just push the button to do the, and it's done. But that was to do the intercompany eliminations, create those journals. We can look for mismatches. So here's debtors and creditors, and there's our $50 credit we saw before, and there's a $132 debit, and interest income and expense. There's also some mismatches in the data, so we can review this for each set of intercompany accounts and decide whether it's immaterial and we can live with it, or whether we need to make some phone calls. And then if you're completely happy with the data, you can submit that, lock it, and start reporting. So we'll just review our income statement, and there's our various entities and the elimination journals that have been happening. We'll spend a bit more time on the balance sheet because that's where we've focused. And so in our balance sheet, and there's organisation 1, and we can see that Alpha said that Beta owed them $1,000, and that's been reversed out. And Beta said that they owed Alpha $950. That's been reversed out. And there's our $50 journal for the intercompany mismatches. And Juliet saying that they owed Alpha and Beta. And Alpha and Beta saying Juliet owed them money. And you see it's getting reversed out there. And the Mike numbers getting reversed out as against various companies saying that Mike owed money, and intercompany mismatch, and there's our net 82. So that looks like it's worked well, and then we would go and look at our reports. View those, and these are the consolidated numbers at organisation 1 in Australian dollars, in New Zealand dollars, in US dollars. So these are different currencies that we've converted to examine the data. And there's the balance sheet. Net equity in the different currencies, and we can see that we don't have any intercompany data at organisation 1. But if we went to have a look at, say, parent 1, then we do have some intercompany data. The Mike Limited hasn't been eliminated yet, but the stuff under parent 1 has been eliminated because there's a $50 mismatch there. and use the visualization functionality of Planning Analytics Workspace to have a look at our sales, net profit, perhaps in US dollars. And that's our monthly process in this demonstration model complete. So I hope you enjoyed that live demonstration of the Intercompany Eliminations module. It's a true consolidation, fully automated metadata creation, uses Aliases if you're using them in your model. It performs the intercompany eliminations very quickly. It can handle a multi-currency model, multiple hierarchies. If you've got statutory and management hierarchies, it can do them both. And if you have restructures, you just run the configuration part of it again. It is agnostic to your time dimension structure, whether you've got discrete year and month dimensions or a continuous time dimension, and multiple data sets, your budgets and forecasts, as well as your actual data. It is easily configured to existing TM1 models, not just greenfield new implementations. It may negate implementing a separate tool to do your consolidations. Using this, where you've already paid for your TM1 license, by this module, and then you don't have to pay license fees on a separate consolidation tool with all the configuration development and security and training on the other software and data transfers back and forth and maintenance of an additional model, and remove all of those pains. So if you want to see the process in excruciating detail at the back end, there is a YouTube video that you can follow that link and see how it's configured and works from a technical perspective. And if you have any questions, feel free to contact me, Michael Ralph, at Cortell